We have around 2.3-ish plus minus 100 million invested in the group, various group companies. Okay. And bulk of, there's always, because we have dozen clients, there's always some buying and selling that happens any given day, because of inflows and outflows, which we don't control. But so from a substantive perspective, the buying was pre-Supreme Court. And we do intend to participate in the follow-on offering, which will be primary issuance, because that is for the growth opportunities that they have. So we do intend to participate there in a meaningful manner. We are not looking to intend to buy the market here and now. So we have no intention of chasing any of these here. What the market will do, what the market will do.
Yeah. There is a thought, Rajiv, that infrastructure assets per se don't make money, if not the assets themselves, then when they are listed. In India, well, history is replete with examples of these companies not having made money. I would love to understand from you, when you think of infrastructure assets and your large investments into the Adani Group, and you have investments elsewhere too. There is ITC, HDFC, there are other names that have come about, and I'll talk about that. But just one question on the infrastructure assets valuing. How do you think about infrastructure in India or general infrastructure asset investing? Because the street seems to have a completely different view, so to say.
Yeah, so the infrastructure investing tends to be a little bit different than your consumer staples, IT service, so on and so forth. There's a long gestation period. You have to invest upfront. You get regulated rate of return. They have to be, by definition, leveraged. I mean, there's nothing like unlevered utility, regulated utility. That animal doesn't exist. Okay, it never existed before. So the notion that levered, anybody says utilities are levered, okay, that's fine. It's just an opinion, not investing that, but you could get very predictable returns for a very long term. So let me give you an example. If you look at, for example, Next Era Energy in the US, which is considered by any sort of astute observer will say that is probably the best utility in US. And actually happens to be out of Florida Power. They were originally called Florida Power Light. These guys are 7 times debt to EBITDA. And it's BBB minus. Okay, that's BBB minus versus US. You can argue is pretty much AAA. I think AAA or AA plus. Adani Green is BBB minus also, but India is also BBB minus. So Adani Green is the same rating. So that's some rating issues. But from a debt perspective, the way you get paid is if you're getting, let's say, mid-teen return IRRs. Once you've invested in those, over time, the earnings certainty is very, very high, and hence they can sustain high leverage. Now, Adani is kind of unique because they are in a very strong investment phase even now. And what we've seen, for example, in ports, and ports is a very good case study, that after certain years, you will see a hockey stick of earnings come through. But you are in the phase of, sort of building that out. It is not like IT services, you turn on, you turn on the tap and revenue start coming in and you become profitable. Just a different business model. There's nothing right or wrong. So from that vantage point, a lot of these businesses have the free cash flow will come through later on as they keep investing. In fact, we don't want them to free cash flow positive. And on the debt side, we feel that, and my view has been they should not be cutting too much debt. To be very clear, the incremental capital that they're raising is for growth. India has ridiculous TAM, if I'm going to call that, because you're basically competing with state-owned companies. I mean, look at the state electricity boards. I mean, who wouldn't want to compete against them, right? I would love to compete against them if I could. I mean, talk about the most inefficient players you get in India, but it ain't easy. I mean, we saw the Reliance infrastructure in Mumbai. They couldn't cut it. I mean, GVK basically had to sell airports during COVID. So somebody said that how come the asset values have gone up, the airports have gone up? Well, if you buy airports in the middle of COVID, it'll come cheap, right? It was basically shut down. So these infrastructure assets have a very long tail. The returns are regulated by the government most of the time. After the initial setup, you get very steady return. So to grow, you have to keep investing more capital. So they're always free cash flow negative, but you get very high returns, right? On a long-term basis. So you get 20, 25-year visibility, which is why we feel that most of the Adani infrastructure companies that invested,